The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hello, Basil Chapman here on this Friday, 2nd of September. We're well into the month of September at this particular point with this kind of environment. And we're looking at very interesting. I've got the TLT chart here. Look at this pullback in bonds. Look at this H pattern in the weekly chart. Look at this monthly that keeps wanting to test. And look at the symmetry of the move down in time. And here we are not even able to have a decent bounce in the bonds. So the bonds are telling us that rates are moving up just in a very, I'd call it steady, but that's pretty sharp environment. Now, the interesting thing is if you look at the TNX, which is the 10-year yield, going to the high, it hasn't taken out the high. And that high was 30, just under 35. It was 34.83, 3.483%. And that was back in June, the week of the 17th. And if you do the exact opposite, you're looking at the TLT, that's bonds. That low that was made back on June it's the same thing. June the week of the 17th at 108.12. We've come down to 108.94, really close, perhaps a little closer, but there is a mirror image, not exactly to the penny, but a very good mirror image. And that's just suggesting, now this is a technical Friday, so I just wanted to do this. Oh, by the way, I was about to leave on Tuesday to be away. Unfortunately, person we're going to has COVID, so we're going to hold off. I will be going probably a week from today. I'll be leaving just for 3-4 days. In the meantime, back at the ranch, I will be here. I thought I would not be here Tuesday, Wednesday, Thursday, and Friday of this week. I will be here Tuesday, Wednesday, Thursday. Just haven't quite finalized it, but that's pretty much the way it looks right now. So let me just explain something. When the MACD, the moving average convergence divergence, rallies, and there's a price movement, but it matches, remember the green line very often matches the price point that you're watching. So in this case, you had a good move up in the MACD. The histogram improved, that's the 0% line. Moving average convergence divergence, spent some time on this during my webinar, beginning of September. And now we're in a peak B. In the Chapman wave dreaded H pattern. Now, I just hope we don't get to that, but I think we are going to get to that. It's this pattern here where, let me put it that way there. I like to see just three patterns that make the core, the template, let's call it, of movement in the market. Straight line up, a straight line down. This can be considered a straight line. That's a straight line. A cup formation or an arch formation. And this is a cup formation right here. Look at that beautiful cup formation in the yields, in the TLT that is. Back early June, goes to a high, pulls back very sharply down to 102.12, and then goes right back, takes out the 120 high at a peak E. But look at that beautiful cup formation, and then it creates an arch formation. Now it's attempting to get to the bottom where it could start a cup formation. So within that context, if this pattern that I call the dreaded H, because it looks like a lowercase h, if it fails at a peak A or a B and then takes out that left side low, you've got to be really careful, because unless the technicals really turn immediately to the upside, or the technicals were actually strong as an emotional pullback occurred, there's a problem, because you could, look, here's a little dreaded H right there. You check out the left side low within 3 bars. It went higher, but you couldn't hold it. And now you're coming back below that one, but not below the most recent one. And that's the low of the 17th of June. So this is where two patterns, and I drew this in. I just remembered I drew this in there. I drew this into the 1 minute chart of the E-mini. before we came onto the show. I think people might have seen me do it as I was preparing. I usually have the charts up, and you can see it in background. I went to a peak E doji high at about 923 or so, and then it pulled back sharply, and it tried to make the 200 period exponential moving average support, and what I drew in was an arch formation. Well, if that arch formation takes out the left side node, that's negative. But if the technicals are starting to improve, and you can see that the lows that were made in the stochastic were a little bit higher on this pullback, and the MACD did make a sharp turnaround, but the red, the 26 period moving average, was a little higher. So look what happened. Instead of stopping there, it stopped here, and now we've got a leg A, a leg B, and we're in leg C above the 200 period moving average. This could be the move that says maybe we've made the low of the day in the E-mini, and we will know if the high of 4009.25 is taken out, and it has to be done within the next hour and a half. If it's taken out in the next hour and a half, you've raised the base of support. This is a very important moment in the market. Let's get back to the patterns we're looking at here. So a couple of things I want to go through. Let's start right from the beginning. INDU. The Dow is up 156 points at 31,815. The reason why, although we got stopped out of our very long position, the intermediate term position, I should say, back in the diamonds, in the 306 area, I raised the stop. I probably shouldn't. I've had a problem over the last couple of months where the entry price that we've had hasn't been taken out. But because if you've got a huge gain, you don't want to see things go back to where you take a loss. That should be the rule. You can always get back in. So what happened is we got taken out for a gain, but I didn't like the fact that we got taken out because all of my indicators said we are right in the area where there should be a rally attempt. It's an attempt. It isn't a full-blown rally because we don't even know how long it's going to last. We don't know whether the stochastic is going to turn across positive from negative to positive, but still at 7.4% in the daily. That's nothing. And it needs to get over into the teens, and then the teens needs to get into the 20% area. There's a lot of work to be done, but it was a start. And everything I said, that there was support in the Dow yesterday and today. So we immediately got back in yesterday, quite timely, fortunately. And then the market closed at the highs. So I didn't want to even touch the DOG. So now we're counteracting that because we are short and we're long. Now I have to say that even though that was a longer term, an intermediate term buy, the fact that we got back in again yesterday means that I have to treat that almost as a short term buy because time-wise it's a very short term. So now I have to see whether or not I want to take away the dog, which was bought before the massive turn down over there. And I don't say it's going back there at this particular point. So I want to treat this as a separate thing altogether. We're either going to add to it. I don't know what to do quite now, quite at this particular point, that particular aspect. But there's something else I'll discuss, and we'll get to it in a moment. The S&P right now, S&P, SPX is trying to rally. Yes, it's up 28 at 39.94, but it's the QQQ and the SMHs I want to talk about when we return.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So the S&P's now finally got to grips. That first 35 to 40 minutes on a day like this is really important, because if all of a sudden you can see some kind of stability first, then a pullback that starts to hold. Every time it pulls back, it starts to hold some support and makes the support even stronger. Then you can have a decent rally. And that's really what we're looking at right now. If this is the close of the day, I'd say, hey, that was a pretty good day. But the day is young. We'll see what happens. There are a lot of conflicting things going on here. So the S&P, to make it as simple as possible, needs to hold 39.73 on a closing basis. 39.73. I'm going to go a little lower than that. 39.68. 39.73 should be good. You know, 39.73 should be good. It's at 39.98 right now. Yes, 39.73 should be good. The Dow needs to hold. It's at 31.850. It needs to hold, I would say, 31.770 on any sudden pullback. Now let's go to the Qs. And the reason why I want to look at the QQQ in particular is that the decline in the weekly chart now for the second week is underneath the inside track repellent zone. What it is saying is that this particular Invesco QQQ Trust Series, that's the Index 100, and I've got some charts that we're going to look at in a moment, that just says to me there's a lot of work to be done, but having gone the low that was made of 269.28, screaming up to the 334 level on the 16th of August, and then coming back down to 397, holding the 390s. So far to me, and this is a Chapman Wave inside track propellant zone it was in yesterday, and today it's out of it, says that the 306 9-period moving average in the daily chart and the 309 black 14-period exponential moving average will be key. I don't have to put any inside track here. We've got enough trend lines that we can look at. So there's a lot of work to be done. And one of the reasons why I wanted to take a moment is, look, the SMHs, the semiconductors, went for the most recent high back in mid-August of around about the 245.74 level. And then it plummeted down to yesterday's low of 210.19. This is a pretty good bounce. And in fact, it's filled in the gap. You remember we've had this whole thing about island reversals. Island reversal is it's a phenomenon that happens because of time. Of course, it's price, but it's also because of time that on the one period, I wrote it down. One day I must put this all together, all these different patterns that I've looked at. There is an island reversal that went on for weeks and weeks and weeks, and I'm trying to think of the stock. I can't think of it right now. I can see the pattern in my head. I just don't remember the name of the stock. And then it gapped down. But because it had so much energy in that island reversal from the gap going to the top and then the gap down, that gap at the top was like a magnet. So if you look at something like a Microsoft had this gap down, but it also made two things. It made a peak G in the Chapman wave and a silent doji the very next day from the high in the 290.94 area. So now it's down, making a potential trough B, and it's starting to show some improvement. But that weekly chart, so it's many other technical things. Look at the way, if I do this, I think I did it on my show sometime, but I didn't keep it in. If you look at this, the price at the highs that were made, I'm going to move this over right here. The high that was made at a peak D in Microsoft way back with the same thing, doji candle, right there. The high was 1582, 315.95 with a Chapman wave 2-bar reversal with the candle at peak D, a little doji candle on the 30th of March. And look at the technicals, how strong they were. Well, when I did the measurement here, right here, on the high that was made around about August the 15th, and then the silent doji after that, the technicals were showing that they were strong, but the price hadn't gone anywhere close to the high that was made up near the 320 level. So that said to me there was a divergence. So there are a lot of technical things that said, should be a pullback. But if you're looking at chart formations, what would be the most obvious thing that I would do? I'd draw in this huge bull formation that didn't break out to the upside. And then I start drawing another one right here and say, hey, Microsoft is in the process of trying to form a base. So how important was that gap, that island reversal around about the 21st when it gapped down from the 280s down to the 270s? Yeah, it was important, but it was really other things. I, in fact, had at the time drawn this rectangle the following day and said, under the 200-period moving average, to me, that's way more important than these island reversals. I love an island reversal, but it's just one technique because a whole bunch of complementary things need to happen. So, yes, it is important, but remember, there are other things. So now let's go back to the semiconductors. And if you look at AMAT, Applied Materials, makes a peak E doji candle high, around about in the 111s, I think it is, somewhere around there. I forgot to put the down arrow. And in all this time, it's just pulled back to about 90, and now it's at 92. So I'm suggesting to you, let's go to NVIDIA. I'm suggesting to you that there are a couple of stocks within the semis that look just terrible. Intel and NVIDIA, Intel, EINTC. Lower lows and lower lows. It's like, it just cannot get out of its own way. It looks like one of those stocks in the NASDAQ that was screaming to the upside, those like Shopify, etc., and just couldn't find any support. Look at We today. That's WeWork's still low. Look at Shopify. Hello, Shopify. Anybody home? Shopify. Let's do this. There it goes. Yeah, look at that. just can't get out of its own way. But look at this incredible support level of in the 29s. It's at 30.86 today. Couldn't even hold a gain. It's down 41. Now, what happens in this pattern? Now we can expect that there'll be a drop to the downside. And then if it gets back, how does it handle this long rectangle, narrow rectangle formation? Let's go back to the semiconductors. So you're looking at Marvell, MRVL, also making that arch formation. So if my rule of thumb that the semiconductors, this is going on for years, I know decades actually, that the semiconductors invariably lead the markets up and lead the market down, that says to me, I didn't want to get too aggressive right now on the upside, but I want to look at the upside to say, maybe it defies what people are looking at and saying just a couple of days rally. Because if we do get the dollar start to pull back, maybe it gives a little relief to the market. Dow's up 242. I'll be right back. Basil, Chapman, Tiger, TFNN.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
We're back. So a couple of questions came in that I need to get to right away. One is the IYT. Yes, the IYT is having a really nice rally. That's the iShares Dow Jones Transportation Average Index Fund, transports. I made a 250.47 high to PG. It's number G/B. It's a PG. And the technical just failed immediately. There was a doji candle straight after that. That's a silent doji. And now we've pulled back pretty sharply. It's gone to almost more than a 1-to-1. It's almost like a Gartley pullback, just in pattern sense. So now what we're looking at 231.50. I want to see the transports at some time next week, maybe by Wednesday to Thursday, at least trying for the 233 to 235 area rather than retest the 230 to 229 area. Okay, question is, a couple of people have coincidentally said, where would I want to see the Dow close today to be able to make some stronger assessment going into next week? And the answer is, I've seen everything that I wanted to see. It's really good. I don't know if I want to send out any updates to subscribers like I did yesterday. I'm going to think about that. But what I had done yesterday was also because I thought I was going to be away for Tuesday, Wednesday, Thursday, so that I couldn't. I would still be able to do all these different things, but I wouldn't have been able to do any updates into intraday. So it's good that we've got our positions. Now what's really important to me, well, there are three things that are important. One is the Dow, if it's able to, well, first of all, it's the Chapman wave Roman candle says if it closes above yesterday's high, that's a big positive. And it makes that level key support, and that'll be at 31,677. But more importantly, if I don't want to say today, I just want to see anything over 150 point close is really good. I want you to see the gap not filled at all. And definitely by Tuesday, I don't want to see that. But if by Wednesday of next week, we are trading anywhere between 32,200 and 32,400, I should say anytime next week. That to me is what I want to see. And I'll do two or three things at the same time. One is within the Dow context, look at the weekly chart. It has just flipped to pink. The day is young. If I can see by the end of the day that the S disappears, that means to sell or short based on the 9-period moving average in the weekly chart above the black 14-period moving average. The MACD is good. Stochastics at 77%. After such a quick move up, having touched 80% and now at 77% in the weekly chart, it's not bad. It's not great, but it's not bad. So if by the end of the day I can see this S just disappear, meaning that the Dow actually goes to the 32,000s, that's probably what it will take to get there. I'm not sure because it's a little different. Probably I could. Let me have a look right now. Okay, so the on-balance volume, let me go down here. No, that just has the balance, that just has volume. Nah, I'm not getting it. Okay, oh, maybe I have to go into this. Okay, there we go. No, there we go. Okay, so that's... Yes, I think if it's possible today for the Dow to get to the 32,000, oh, it's another 100 points from you. I don't know if I can do that. But just let's say you can get to, the question was, what would really be impressive? What would be impressive is if the Dow is able to close somewhere in the 32,000, close to 32,050, then I want to see what happens here. If on Monday, Tuesday, there's a good rally, a follow-through rally, then I think we get back to green in the 9-period moving average. Let's see if the same thing is comparable in the S&P. Yep, it's the same thing. It's a little deeper in the S&P. It might take a little bit more. The S&P needs to get at 40.10 right now. It needs to get to 40.25, 40.30, I suspect, somewhere around there, for us to have a chance at the weekly chart going from S to back to L. That means long. So that's okay. So I've covered those questions. Question came in. Oh, crude oil. What's your assessment? Well, I can't find the exact word. What's your assessment of the crude oil situation? And you've mentioned the base of support. What is it? I think it was, what is the base of support? Base of support is obviously 84. A close below 84 would be the first time that it has gone below the 84s since the week of the 15th of April, where the low was 83.93. And if next week crude oil takes out 83.20, that is the low way back in March, that suggests that crude oil is in fact not a factor at this particular time and is disappearing as a factor. Oh, VIX index. To go with the market pullback, you want to see peak D in the VIX index. Usually I don't do ABCD as important in the volatility index, but it has for some reason become quite important. It did make a D in the 27s. Now it's at 23.42. And that just suggested to me yesterday that red candle, as it was getting stronger and stronger to the downside, yesterday said, you got to get back into these things. And that's why I sent off my email at 2:55 yesterday. Fortunately, we got into some nice positions. So now what we're looking at is VIX index is pulling back. So to put the whole picture together, I need to see the XLF. Nice move up today. That's the financials up 33.65, up 49 cents. I want to see that work on a closing basis. I'd like it to be near the high today than the low. On a personal basis for subscribers, I would like to see a sudden pullback just towards the close, and quite a sharp pullback, just a little nervous pullback in the XLF. That to me would give us entry points on what I would like to get into. Let's do this. Yeah, you've got right there. You've got Chapman falling X formation. It's got a long way to go. 34.35 is really needed to show any kind of a breakout, but there is a sell mode in place that has to change to a buy signal. So there we are. That's XLF. Very important. Looking at, I had it just a moment ago that was so important that I need to look at. Yes. So the question came in the crude oil. When you look at crude oil, do you look at natural gas at the same time? I do, because they often move in counterpoint. And you can see this by this huge move up to a leg D in the monthly chart of the crude oil. This is a continuous contract. If crude oil, I'm going to give you a price, but it's a continuous contract, so it gets smoothed. Yeah, it gets smoothed out. 7.88 was the high. Oops. 9.998 was the high in August. If that's not taken out this month, that makes a peak D. And that says, okay, you got to watch this closely, because this is the buying season for natural gas comes in. This is when demand is going to start coming in. So we're watching that closely. It could be maybe a 1 month pullback. I suspect, and I said this ages ago when natural gas was down here, I said, this is fabulous. This looks to me like if it goes above the high that was made on the 10th, the week of the 10th of June, my price is 9.57. If it goes above that by 1 penny, 9.574. If it goes to 9.575, that has to be considered a new leg up in a buy mode. So that's a leg B. So yes, crude oil, natural gas, I think, is going higher in 2022. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks, we're back, and we're looking at the Dow now up 324 points. That's exactly what we wanted to see. Fabulous action there. Or what could have been a horrendous day. We're going to go to our caller. We've got Brent in Martinez, California. Brent, how are you?
Oh, I'm doing well, Basil. How are you?
I'm very good, thank you. You'd like to look at?
Oh, I was calling. I've talked to you before about the lightning trades. I like doing those on the Friday expiration.
Correct, yes.
So I went into the Nugget this morning. It was up already this morning, but I let it back down a little bit. And I bought into the 2450s that expired today. And I've actually already sold out, and I might keep going, but it was a really nice trade. I got in at 30 cents, and I sold them for right around $1. So it was a good trade for about half an hour worth of trades.
Oh, that's very good. So you didn't get in yesterday, but you got in this morning. So initially, after you got in, there was a little bit of a dip, and then it started to move, and it's actually at the high of the day so far at 25.54.
Yeah, I just tried to be a little patient. I didn't buy right at the open. I let it trade a little bit when I saw it back down some.
Yes.
It got to kind of the price level I wanted to be. I felt at that level I can take a shot at it and, without a lot of money at risk. And so, no, it worked out well.
That was really good planning. I didn't even think of that because I was thinking today from yesterday's action. I thought, what would be the best way to play an option? And for some reason, I wasn't thinking so much is going on because I had plans that were changing, that I was going to be going away and then couldn't go away. So I just wasn't thinking along those lines. But that was perfect. And the reason why I say it was perfect, because I don't know if you looked at this, but I had the dollar going to 109.98 yesterday. In leg D, we've been waiting and waiting and waiting for the Chapman wave fourth highest peak D to occur. Boom, it happened yesterday, and I said, wouldn't it be great if the dollar now has a bit of a digester phase, because it's actually only a tad over the 109.20 high of the 19th of July. That was the high. And then it pulled back to 104.64. Not a big deal, but that for currencies, that's a pretty big pullback. And then it went to almost the same point, 109, I think it was 27, and then it pulled back, and then it went just over, but it closed under, and then it stayed under for 2 days. And then yesterday, it popped up, and I thought, wow, all that hard work suggests to me that we could be seeing, and that's another reason why I became quite bullish on the very short term, near term, I should call it, going into yesterday and yesterday, because my thinking was, if the dollar even takes a digester phase, it doesn't have to pull back much. It just needs to go from 109.19 where it is now into the 107s. It's only 2 points. But my thinking here is it just gives enough of a relief. And now I wanted to show you a chart. I don't know if you're looking at the charts right now. If you look at gold, the H pattern that I always talk about, markets are made of arch, cups, and straight lines. That's all it is. Well, look at the arch formation, the low that was made in gold, and this is the continuous contract. So I'm saying 70, it's at 1727.4 right now, up 18, but the price gets changed because it's a continuous contract. So whatever the price was, mine is 1,696.4 on the 21st of July. It goes to a peak D, doji candle high, right on the 10th of August at 1824.6. And lo and behold, yesterday, where does it go to? It goes to 1699.1, and the low that we were comparing it with was 1696.4. So there was an absolute perfect symmetry. Now the perfect symmetry goes to the high that was made. That's the candle high. The doji, but I use the silent doji of the next day, the 11th, to give a left side, right side price time match, and it went to the exact day. That was yesterday, the 1st of September. So when I put that all together, I thought, well, all the ingredients are here for at least some kind of reflex rally, but there's a chance that it could last a little longer. The reason why I'm taking just a moment here, a little kind of extended commentary, is that I think you had said you're not sure yet if you treated it as a day trade and you were not sure yet whether or not you should get out. Is that correct?
I've already sold out, Basil.
Oh, you have sold out completely. Okay, I think it kept a little bit.
Yeah, because I made a triple on it. I'm not going to get greedy.
Oh, absolutely fantastic. But, sometimes I look at the chart and I say it's telling me something a little different to what I was thinking before, and therefore I can make a little modification, that's all. But you can see in my 1 minute chart of gold, it's just walking the 9-period exponential moving average. So I was going to say to you, if you hadn't gotten out earlier of the whole thing, around about here is probably where you're going to get your absolute best premium, unless it goes up another $2-3. But premium-wise, the surprise factor must have extended the premium. It must have been shrinking, and then as gold started to explode upside, that premium must have expanded a lot, even on a day trade.
Yeah, definitely. I just love getting into the last day that it is going to expire. So they come down so low that, and not always, but it doesn't work every Friday, but any chance that I see an opportunity like that, I try to take advantage of it.
Well, you certainly did. I have to congratulate. I mean, just even thinking about it now, I don't know how I missed it completely to say I felt very strongly that gold would move. I didn't actually say to subscribers, go long anything in the gold area. I was just busy focusing on other things, but that was perfect. I like it very much. Congratulations. And the other thing is, very often you get into a core position as well as the options. So this time you didn't get into anything core. You just treat it as an option trade. Is that right?
I have been nibbling on some of the gold stocks down at this level because I just think at some point, it's been a tricky one. I've definitely been doing more day trading with gold. It's just been a little bit frustrating. It's just a little bit like the market, up and down, and hard to tell what direction it's going to go. But I just thought today, with the way it had been beaten down, there was an opportunity there.
Yes, and that volatility, and in fact, I think that instead of crashing or crunching or whatever it is, I think it's volatility in September that we're going to be looking at. Really high velocity within trading bands, volatility. I think that's kind of the way I'm looking at it right now. We have built a nice cash position. I think this is also the time that I want to start looking at stocks that led the most recent rally that have just been taken down, because there's a chance that they get back into rally mode, rather than the stocks that have just been beaten down, and there's still nothing there. I want the ones that did succeed and are actually just pulling back now for a breather. So gold does not fit into that category, but gold definitely does fit into the category that says if there's a chance, and if you look at the EUR USD rallying today, oops, that's the 1 minute chart. I wanted to do it in the I just wanted to do this, and then we can wrap this one up. Look, the euro. Yes, the euro still needs a lot of work, and that's what's telling me choppy. So just the fact that you got in and out like that, great. In the den, Zitar says, Brent, master of Friday options scalp trades. Congratulations. Thanks for calling, and have a great long weekend.
You too, Basil. Thanks so much.
Thank you. Folks, we'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. We're back. We're going to go to Mike in Ormond Beach. Hi, Mike. How are you?
Basil, I'm doing great. If you could point out some resistance and support areas on the S&P on intraday charts, like a 5 and a 10 minute, that would be great. I just did something similar to what Brent did, but I did it with SSO. I got in at 40.30 and I got out at 50.11. And I'm just, trading intraday, trading these short-term bursts.
I think that's a great, let me just give you the count. So we did an A, B, C, D, E with a doji candle on the SSO, which is, that's 2 times long, right?
2 times long S&P, yes.
Correct. So then it pulled back with a doji candle at 48.72 at 3:15 this morning. Wait, what am I looking at? That's a 5-minute chart. That's right. So, okay, and the next thing is, that was yesterday. So today it goes peak A, B. It's at a C, This is a crazy kind of pattern. I've seen this a few times now where the arch formation actually goes above the previous high with a little doji candle. The way it looks right now, it should still go. Are you completely out?
Yeah, I just completed one trade, and I'm looking for another support area. It looks like it might be dead now.
Yeah, the support area, it's either right now in the 49.92 to 49.72 area, but I think this is a little bit more dangerous because I can see it going down. It could even test the 200 period moving average of 49.01 and then have a bounce into 230, 310 this afternoon into the 49.70 area. So this is a little bit trickier now. I'd be a little careful on a second trade. Yep. You've done well. Folks, I'll be back.
I'm very nimble, Basil. Tight stops and short-term trades.
Good. Well, thank you. Congratulations. Thank you for calling, Mike. Keep that up.
Thanks for the education.
Thank you. I'll be back. Have a wonderful long weekend. Stay tuned. You've got Steve Rhodes. Steve recorded his show. Great program rest of the day. I will be here